anything from China, which in a sense could make a case that money on a very large base, large reason should move back into China. So one makes an assumption that globally nothing changes, which is what the whole assumption is. Locally, a lot of bad news is in the price, and C, the FI selling is, I think, still the moving part to decide the market mood in the near term.
Yeah, that FIS selling unfortunately continues unabated, and that's partly on account of the dollar strength that we have been seeing. That's not weakening at all, so continue to see quite a bit of dollar strength. But overall, as we were pointing out, yes, the Santa Claus rally failed to materialize when it comes to the US markets, but at least on Friday, we had a decent close at our hands, and Nasdaq was up a good 1.7%, close to that 19,600 mark. The Dow managed to inch up around 300 points, and S&P rallied hard too. Remember, this week is a bit shortened one because on January 9th, the US markets are going to be shut to mourn the demise of their early president. So that will be in focus. And of course, the jobs data, that's something that the street is watching out very, very closely, because that might just decide the course of future actions from the US Fed as well. So that unemployment data and the jobs data is something that the street is eyeing for. And maybe just ahead of that, the mood might be a bit more tempered. But as we are talking about, if you look at the 10-year data, that continues to be at around 4.62 levels in the United States, and crude has continued to be around $76 per barrel. So all of those macro factors haven't really moved much over the course of last 2-3 days. But the Indian markets did move. We advanced for second straight week. The broad indices too were in the green. Nifty Auto managed to hit a 1-month high. Real estate, however, was showing signs of profit booking. So a lot of mixed cues coming in. IT, of course, snapped the gaining streak. So just ahead of earnings season, with January 9th being the date for TCS to kickstart earnings, this will be in focus. But we might have not got the earnings, but we did get a lot of provisional updates. And Nikunj, I wanted to deep dive into those banking updates that you were talking about. You said that they are not too bad, but I mean, there isn't too much to cheer about either. If you look at HDFC Bank's numbers, again, missed the expectation. IndusInd Bank, the deposit growth is lagging the peers. AU was pretty much okay-ish. IDFC was on the better side. Bajaj Finance was on the better side. But by and large, if you look at core banking names, there's nothing to cheer about specifically.
You have to look at every bank differently, right? You cannot compare AU and Bajaj Finance, and you cannot compare Bajaj Finance and HDFC Bank. For HDFC Bank, what matters to me is the deposit growth. It's very easy to get credit growth. Very easy to get credit growth. In India, you can lend as much as you want, but can you get deposit growth? And for me, a 15% deposit growth, I think, is a very impressive deposit growth, which in a sense has been the pain point for HDFC Bank. AU, well, we know that there is a bit of a contraction which they are going through, and of course they are not lending in the MFI business because of the acquisition they have done, and they want to take it very easy. IndusInd Bank is being pushed into a corner because of that MFI problem, and they genuinely are going through both a cyclical problem and a structural problem. All hopes of a comeback in IndusInd Bank clearly have been damaged after what they've indicated and declared for the quarter gone by. Then you come to Bajaj Finance, and I like those numbers. I like those numbers both in terms of the liability franchise, what they've created, and the growth, what they have initiated. So while we may argue back and say that, okay, is there a problem with banks in terms of growth? Well, you are going through a slowdown in the economy, and if you're going through a slowdown in the economy, obviously numbers will not be as heartening as what you actually anticipated. I mean, you had a print of less than 8% for less than 7% for the quarter gone by, which materially would have impacted the corporate loan book. That is what my understanding is. So I'm not making a case that these are rara set of numbers and we could be in for a big spike back into the banks, but for me, every bank really needs to be analyzed very, very differently, because Bandhan Bank is at a different bent and a different curve in terms of where the franchise is moving. And similar case, I think, is with RBL Bank. So if you look at advanced growth, Anisha, for RBL Bank, 13% not bad, frankly, but the base is low. So I will not, get too much into it. But these are not terrible numbers. These are not bravo numbers. Will they keep these stocks stable? The answer to that could be yes, especially Bajaj and HDFC Bank. That's my view. And given what we saw from some of the retailers on Friday, it looks to me that it is not that bad, because if you look at consumer demand and weave it with credit demand, pretty much which way the economy has moved for the quarter gone by.
Yeah, and looking at the brokerage reactions as well on Bajaj Finance, I guess the cues were out there on Friday when you had the financials chug along and names like HDFC Bank were significantly under pressure. BOFA, of course, is like the quarterly update from Bajaj Finance. They are maintaining their buy with a target price of 8,800, saying that the core AUM growth has come in strong at 6.4% on a sequential basis. They're saying it's been strong delivery on new loans as well, customer addition metrics, risk pruning, tighter underwriting in select segments as well. And similar is the communication from JP Morgan as well, which also continues to maintain its overweight with the target price of 7,300. And I guess what's going to work in the favor of NBFCs is also the fact that they've seen some amount of underperformance already play out. So that bit of delta is what they have to work with.
Yasha, I genuinely feel that the new RBI regime versus the last RBI regime, it would be very, very different. Now, we may talk about the fact that Reserve Bank of India, in a sense, always, follows what could be called as a cadre-based approach. But personalities do play a very large role. And the need of the hour right now is to really ensure that credit reaches at the last mile, so to speak. And that's where I think this over-tightening by Reserve Bank of India, in a sense, has impacted at least the low end of the pyramid, both in terms of availability of credit and also the indirect demand. So I genuinely would feel that this could be a better year for NBFC stocks per se, because if interest rates they come down, which they will, we can argue whether it is 50 or 75, but rates in India this year will come down, then NBFCs are the ones which would benefit immensely, and they would benefit the first because they borrow in wholesale and then they lend in retail. Wholesale borrowing cost will come down first, retail borrowing cost will get adjusted later. Second, for most of the NBFCs, maybe one more quarter, and then you in a sense would know that the pain in the MFI space, the pain in the rural space will start getting reduced. So not every NBFC is going to be doing well, but right at the top would be Bajaj Finance, then somewhere in the center, the L&T and Mahindra and AB Birla Financial Services, and then gold NBFCs. That's how I think the stack for NBFCs is likely to move. For Bajaj Finance specifically, you pretty much got a sense in the month of December when Bajaj Finance did an annual day what they are thinking. But in terms of a commitment, whatever they're committing, they are managing it, they are delivering on it. And even, if I may want to point out for Bajaj, Home Finance, the new subsidiary or the new subsidiary of Bajaj Finance which has gone public, on that kind of a large base, when they are the second largest in India, the growth is 20%. So home loan growth, Anisha, may be 5, 7, 10%, but they are growing at 20%. So it's very case to case when you look at banks. It's not like IT that you look at Accenture numbers, you get a trend. That I think is the differentiated factor.
Yeah, separating grains from.
If you like this video, then like, share and subscribe to ET Now.